Hi everyone. Today I have an interesting video for you guys. I'm going to compare Palantir Technology stock with Rivian stock and determine which one of these two growth stocks is the better buy. Now bear with me, I know they're in different industries here, but I thought it would be a really interesting comparison because I know a lot of growth stock investors are looking at these two and thinking, which one should I put my money in? So let's get right into it. I'm going to look at 5 or 6 different metrics to analyze this decision, starting with revenue. Trailing 12 months, you look at Palantir has been around for a long time, nearly 2 decades. They got revenue of 1.8 billion in the trailing 12 months. Rivian just recently started ramping up output. They're already at 1 billion in trailing 12-month revenue. I suspect that's going to continue to surge. They've got a lot of orders in the backlog, so at least in the near term, they're going to ramp up production. They've already got buyers for these cars that they're going to produce in the near term. So revenue, they're going to surpass Palantir in due time here. The next metric I wanted to look at is operating profit margin, and Rivian, although it is catching up quickly to Palantir in terms of revenue, I think it's going to be a lot longer before they catch up to Palantir in terms of progress on operating margin. Rivian is negative 700%, 716% to be precise, in operating margin losses, negative, while Palantir is at negative 11%. But more impressively, Palantir is showing some evidence of economies in scale here and improving its operating losses, getting better and better and better with each quarter. So significant advantage here to Palantir, and I would say that operating margin is a more important metric than revenue growth. The next metric I wanted to look at is cash flow from operations. And again, Rivian showing this significant downward negative trajectory here, losing 4.69 billion in cash flow from operations in the trailing 12 months. Again, it's only recently ramping up production. It's likely going to continue with these negative cash outflows for the foreseeable future until it gets up to scale and turns positive in cash flow. Palantir already reached that level, impressively going from negative 300 million in cash flow from operations in the trailing 12 months, improving that all the way up to positive 238 million cash flow from operations in the trailing 12 months. And look at this, it's been positive for several quarters since really mid 2021. It turned positive in terms of trailing 12-month cash flow from operations. That means the business is on sustainable footing. It doesn't need to go out and raise more cash by borrowing money or selling more stock to get cash. Rivian may need to do that if it continues losing this much money. Although, let's look at this next metric and you'll see why that's not really a problem for Rivian just yet. Next, I wanted to look at cash and equivalents on the balance sheet. How much cash do these companies have right now? And this was really more of a concern for Rivian because it's losing so much money in terms of cash flow. But look at this, they've got $13.3 billion in cash in the bank. So they've got some time before they're going to even need to think about liquidity, raising capital, or selling or borrowing money. They may never need to again because they may use this cash that they have to get up to scale enough to where they can be self-sustaining at that point, generating positive cash flow from operations. Palantir too, they're solid, 2.4 billion in cash in the bank, and they're already positive in terms of cash flow from operations, so no concern from either of these two in terms of liquidity just yet. The next metric I wanted to look at is shares outstanding, and this highlights how much these companies are diluting shareholders when they eventually do become profitable, or if they ever become profitable. Those profits will be split among more shares if shares outstanding are higher. So I like to see this metric flat or declining, but I understand growth stocks, they need to pay some of their employees stock-based compensation and stock grants. So I understand a little bit of stock-based a little bit of dilution, but I hope not to see too much of it. Looking at Rivian, they went from 720 million shares outstanding to 918 million, so roughly 20% increase, 200 million share increase. Not so bad compared to Palantir, which went from a little over 800 million shares outstanding to over 2 billion shares outstanding. So they more than doubled their share count. That's a bit alarming to me. Rivian has the advantage in this metric. I like that their share count increase was not as much as Palantir's share count dilution or share count increase. Finally, I wanted to look at valuation, and looking at the price to sales forward, I had to use this metric because Rivian is negative cash flow, Rivian is negative earnings, Palantir is positive cash flow but negative earnings. So this is really the only metric, one of the few metrics that I had at my disposal to compare the two in terms of valuation. And looking at this, you can see both of these stocks are down significantly. Rivian used to trade at a price to sales forward over 45, and Palantir also used to trade at a forward price to sales over 45. Now they're each down way below that. Palantir trading at a forward price to sales of 6.8, while Rivian trading at a forward price to sales of 3.3. So according to this metric, Rivian is less than half the price of Palantir. However, just because it's cheaper doesn't mean it's the one to buy. In fact, to answer the question in the headline, which one of these two is the better stock to buy, the better stock to buy, the better growth stock to buy, I'm going to say Palantir. Palantir is the better growth stock to buy. They've proven economies in scale in improving their operating margin. They've proven they can run the business at a positive cash flow from operations. So for that reason, I'm giving them the benefit of the doubt and willing to pay a premium price for Palantir over Rivian Technologies, over Rivian Automotive. All right, so that's all I've got. As always, I truly, truly appreciate your viewership. Thank you for watching, and I hope to see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.